Hello subscriber, welcome to my YouTube channel Knowledge Videos. Today we are discussing the corporate accounting and financial management lesson 1 topic journal. So this video will guide you the concept of journal, different types of journal, how the journal entry should be passed, what are the basic format for the journal entry that we are going to discuss at today's session. First of all, we'll need to understand the concept of journal. That the concept of journal, we called it as a books of prime entry, that is journal. A journal is often referred to the book of prime entry or book of original entry. Journal is considered to be as the process when we are started the concept of accounting, the first step to entry the transaction, that is the journal entry. So that's why it is called as the books of prime entry or book of original entry. In this book, transactions are recorded in their chronological order. Chronological order, it is nothing but the step by step ascending order of the transactions. So ascending order of date of transaction. For example, there is a transaction occur in the 1st July, then it will be recorded first. If there is any transaction you have in the 2nd July, it should be recorded after the recording of the 1st July transaction. Then it will be not going to be a 2nd July transaction will be record first, then 1st July transaction. So for that purpose, we need to understand that there is a chronological order of recording the transactions. The process of recording transactions in a journal entry is called journalization. The process, the concept of journalization, how it evolved, it is a process of recording transaction in a journal entry that we call as a journalization. The entry made in this book is called journal entry. So whenever you are recorded the entry in the journal, that we call as a journal entry. What are the basic functions of journal? Why we need to have this journal, and what are the major function of the journal entry? The first thing is the analytical function. Each transaction is analyzed into the debit aspect as well as the credit aspect. This helps you to find out how each transaction will financially affect the business. Because as we were discussed in the last video about the account, and then we talk about the different types of account, then in that we talk about the golden rules of account. So as we know, every nature of account has their own rules and regulations. So while making any journal entry in the books of journal, that time we need to understand the aspect of debit and credit. So the analytical function will be the first step or first type of function of the journal entry. Then recording function. Accountancy is a business language which helps to record the transaction based on the principles. The principles come into the picture, that is a golden rule of accounting. Each such recording entry is supported by a narration. Narration is nothing but it will give an idea about the transaction. For example, you have purchased stationery for the use of office or for the office use. So in that case, you have make a payment through the cash. So you need to specify, yes, this transaction because of purchasing of a stationery. So that will be simple language will require to explain that. So narration means to narrate or explain. It start with the word being. Usually this concept in the traditional approach, being you can use, or even in a simple or narrate, or you need to explain the transactions in a very simple way to express that anyone read that narration, understand, yes, this is the journal entry pass for this type of transactions. Historical functions. It contains a chronological record of the transaction for future reference. So you have the past record data in a journal. What are the advantages of journal? Chronological record. Yes, obviously it records transaction as and when it happens. So it's possible to get detailed day-to-day information. It means what? Means if you are going to get an idea about what is the day-to-day transaction of the business in a specific date, so you can get a details of the all the information through the journal entry. Because it is recorded in a chronological order, you can easily get the access to the same. Minimizing the possibility of errors. Yes, the nature of transaction and its effect on the financial position of the business is determined by recording and analyzing into both debit and credit aspect. So in the concept of the minimizing the possibility errors means if you are going to see the difference between the debit and credit, then there is a chances of you have make a wrong entry or you have make a wrong amount. So it can be easily identified if you are going to keep a day-to-day record in a proper way. Narration. It means explanation of the record transaction helps to finalize the account. Journal is the basis of ledger posting and the ultimate trial balance. Means the information from the journal will be recorded in the posted in the ledger. Then from the information from the ledger will be posted into the trial balance. Then we can proceed for the final account. This is a basic specimen of a journal book. So in the you can see that in the date there is a column called for the first column is called date. So in this you have to record the date information and particulars. It will be recorded all the information that you need to give a different account. Like for example, you have make a entry like cash account debited to bank account. So in this case you have to specify the particulars and then you have to write the narration in that specified voucher number, then ledger folio, debit amount and credit amount. This is the format of the journal. So whenever you posted any information, you will find this format and you have to prepare this format to record the all the transaction which was there happening in a business activity. So regarding the explanation of the format, so date column, what date column contains? This column contains the date of the transaction. It will be very simple way to understand it. Particulars. These columns contain the information which account is to be debited, which account is to be credited. It is supported by the explanation called narration. Voucher number. This column contains the number written on the voucher of the respective transactions. Ledger folio is nothing but it is the column contains the folio, that is the page number of the ledger where the transaction is posted. Means in a journal books you will find the ledger number, ledger page number, and in the ledger page number you will find the journal page number. So this is the vice versa, the ledger folio and journal folio we called it. Debit amount and credit amount. This column shows the financial value of each transactions. The amount is recorded in both the columns since for every debit there is a corresponding credit. All the columns are filled in at the time of entering the transactions, except for the column of ledger folio. This is filled at the time of posting the transactions. Usually when you prepare a journal entry, you no need to fill any information in your ledger folio column because this will be kept blank unless until you're not going to post this journal entry in a ledger books. Once you posted this information in a ledger books, so you need to fill the gap, that fill the information in a ledger folio, the page number. Journal. Journal is divided into two types. One is a general journal and special journal. General journal is as it is simple journal that we see in it, and there is a special journal that can be cash book, purchase day book, sales day book, return out inward books, return outward books, bills receivable books, bills payable book. Let's further discuss about the same. General journal, this is the book of chronological record of transaction as we see the last for sample a specimen for the making into journal entry the same, but in this format, so we don't keep the voucher number. Usually due to the technological advancement, all the transactions are recorded in the ERP base or in the technical platform base. So in that case there is a requirement of the voucher number, but in the initial phase this is the format of the journal entry. This book record transactions that occur so infrequently that they do not justify setting up special journal. It will not be means this type of transactions are not occur infrequently. It may occur in a some time base or infrequently. There is a number of transactions of such type of entries is very limited. Compound journal, a single transactions involving only one account being debited and one account being credited is known as a simple journal. If a transaction requires more than one account to be debited or more than one account is to be credited, it is known as compound journal. That is your subsidiary books. Subsidiary books are intended for specific transaction of a similar nature. These books also known as special journal or day books because it has some limitations, because this type of transaction occur frequently. In a day, there is a n number of transaction will be occur in a day. So that will be for that purpose, there is a need of subsidiary books. Thank you guys. Keep watching this video. Subscribe to my channel. Thank you.